Oil giant ExxonMobil out with earnings last week, reporting earnings and revenue that were lower than a year ago amid declining oil prices. The company also reported climbing oil production and higher refining earnings in the third quarter. Positive news for investors. The company reported earnings of $4.2 billion and revenue of $67.3 billion for the three-month period. Joining us right now in a Fox Business exclusive is ExxonMobil Chairman and CEO Rex Tillerson. Rex, good to see you again.
Nice to be with you.
Thank you so much for joining us. So you reported earnings. Let me just get your take first off on how the world looks. What did the quarter tell you about where we are right now?
Well, it was a challenging quarter for parts of our business, but I think the quarter really demonstrated the value of our fully integrated businesses, upstream, downstream refining, petrochemicals. Refining had a terrific quarter with the low feedstock costs, low crude prices, high margins. They doubled their earnings from last year. Chemicals, a very solid quarter, both on the commodity side and on the specialty side, low feedstock costs, low energy costs. So this is a real opportunity for that part of our businesses to perform quite well. Upstream E&P business, very challenged at these prices, both oil prices and natural gas prices, so earnings there were off dramatically. But I think if you look at the entirety of the results, a couple of takeaways, I think, are we're working on the things that we can control. Delivering on our capital investments. Our spending is pretty much in line with what we had anticipated. Projects are moving on schedule. Some are actually moving ahead of schedule. And we're working on the cost structure across the whole corporation, particularly on the upstream side, to try to capture some of the market savings. And the real number I think that people are watching carefully, obviously, is free cash flow. Because when you're in a low price environment, can you fund all your programs? Can you continue your payouts to your shareholders? We generated $3.5 billion of free cash flow in the quarter, which means we fully paid for all of our investment programs, paid the dividend, and continued a share buyback program. Didn't have to go to the debt markets to do any of that.
And in fact, the mix of your business has helped you in the past in terms of offsetting any weakness in prices that we've seen. So once again, you saw that happen.
Again, we see it, and that is, we feel the value of having that fully integrated value chain where we're basically in the hydrocarbon molecule management business. We take it from in the rocks all the way to a finished product, something you either put in your tank or something you wrap and package your salads in every day. We own that molecule all the way through the chain, and our mission is to discover where is the maximum value for that, capture that value wherever the market wants to provide it.
We've been talking on the program really every morning about this debate about really how this economy is right now and how strong it is. What do you see all over the world? I mean, we've been talking about the weakness in China and this emerging market story that really has not improved in about 7 or 8 years. So can you take us around the world and talk to us about what the oil story is telling us about economics?
Well, energy is a great indicator
right.
of how the economy is performing because energy is what fuels that economy. Here in the U.S., it's just been a very sluggish economy. Ever since the downturn of 2009, we've never really found our legs. We've just been kind of sliding along at a very, very modest economic rate. Europe is pretty much sliding sideways. They've had that little uptick this year. We saw a little improvement in energy demand in Europe, I think as a result of the low prices. And in China, we're seeing the rate of growth continue to bend over. Energy demand in China had been running 4 to 5% per year. This year, we're seeing about 3.5% demand for crude oil. Next year, we think that's going to decline further to about 3%. So seeing that Chinese economy, and part of it is the economy maturing a bit, beginning to slower its rate of growth. So if you look at energy as kind of a proxy for how the economy is going, it's pretty sluggish. And there's not a lot that we can see on the horizon through next year that's going to change that.
And you've been keeping spending in check as a result of this sluggish story all around the world, and yet you haven't cut the CapEx budget as much as some of your peers.
Well, we had been investing very heavily. If you look back 5, 6, 7, 8 years, and we told a story how we were going to recapitalize our upstream business. So we invested a lot of capital into the upstream supply development into projects that are going to deliver for decades. That peaked about 2 years ago. We began to roll that over and begin to reduce our capital spending 2 years ago. We're down this year. We had indicated we'd be down about 12% this year. We're actually down about 16% through the quarter. We'll see whether those trends continue to the end of the year. And then going forward, we had indicated we would reduce capital further over the next 2 to 3 years, probably to below where we would be this year. And that's a recognition not of some necessarily strong view about the pricing environment over that period, as much as just looking at the opportunities that we want to pursue to build out the next 20 to 30 years of how we're going to manage the corporation.